Like some jazz music in the back.
Yeah, good idea.
What's going on, ladies and gentlemen? Just gonna wait a few more minutes for people to trickle on in.
Good morning. Got a little jazz going this morning. It's the go-to relax and look at the charts music for me. Top of the morning.
What's up, Austin? How are we doing? Good morning.
Good morning, good morning, good morning. Might switch it to the coffee table jazz playlist. I don't have. Should get another cup of coffee. Already evening in Nairobi, Kenya. So he's drinking a cocktail instead of coffee.
Yeah.
Don't be drinking too much while trading. That can lead to disaster.
All right, we got about 23, 25 people on. I'll give it until 8:05 Eastern, so less than 2 minutes, and then we'll get going here. I think we have quite a bit of people. I guess I can ask the question now. So, guys, we want to give you guys the best value as possible. We want to make sure we're utilizing not only our time, but your time the best. So we have one of two options for you. Obviously, majority rules here. Would you like us to continue to break down charts as we have in the past? So obviously, I go and do a few charts, then Aiden will do a few charts and kind of break them down top down. Or would you rather it be more of like a laid back, chill session where we still share our screen? Aiden and I kind of just talk amongst each other about the charts, what's going on, and kind of make it a laid back session and try to provide some sort of trade for you guys to take. Obviously, if there's nothing to take, there's nothing to take. But or do you guys really like the way that we have been doing it before? Just let us know in the comments. Be happy to restructure.
Austin said, "I like the jazz on the daily market breakdowns." Yeah, man, super chill. Hopefully, it's not too loud in the background, but definitely gets me in the kind of in the zone.
Chill session. Okay.
Chill.
So we can try that today. Just kind of chill out. You guys can relax on the charts with us. Just kind of hang out. We won't do like I guess a formal breakdown, but we'll kind of just talk about setups as they come. Chill session. All right, we'll try it. All right, well, I guess we'll get going here then.
Yeah, everyone's saying chill session. I'm cool with that. What are you guys looking at? What are you in right now? The trades. Where do you see EURNZD going now that it broke that or has destroyed that monthly that old low from 2017, I think, right, Nate?
2016 December, 2017 January. Finally took that low. Been calling that out for weeks now.
Yep.
A nice
Weeks
trade
and weeks.
Sunday's webinar for those of you who hopped on. Took a beautiful trade on EU.
I think it's going to be critical, guys, to see how EU closes up on the week. Right, we're midweek right now. Let's see if we get any type of reversal. See if we close as some type of hammer to the upside and maybe close above that level. Contrarily, if we kind of sustain below these old lows, you know, I could very well see EU dropping another 1,000 pips. You know, but it's going to have to be something where we see how we close up on the week, I think.
Yeah, take a look at those weekly, monthly closures, guys. They're very important. It's not so much important for, you know, actual entries, but it can be very, very important for directional bias, but especially around areas of liquidity. How do the higher time frames close? Especially that weekly and monthly candlesticks. They really give us an indication as what's next to come. Yeah, guys, I'm not saying that, you know, we're not going to provide value. We could try a chill session. We'll still go over everything that we were going to go over before. We're going to give you guys all the levels we're looking at and full explanations as to why. But maybe today won't be like 100% formal like we thought before.
Yeah, momentum is still to the downside on EU. And yeah, I mean, we are below old significant lows, right? So, you know, traditionally we do like to be buyers below old lows. That's when price becomes attractive, but we can't fight momentum, right? So, you know, you can't force something that's not there. And really, until I see otherwise, I'm going to continue to look to sell it, right?
Psychology talk. That reminds me, guys. If we created a psychology course or something like that, like in depth, full all out psychology course, would you guys be interested in it? Or even doing like some sort of free psychology series on YouTube or something? Would that be something you guys would want?
It would be super cheap, but
yeah,
got to assign some sort of monetary value to it to weed out the time wasters.
I think that can really help you all. Psychology is probably number one reason 99% of people fail.
And it's the least talked about topic.
Mm-hmm. All right, I guess I'll share a screen. I guess I can start. How do you want my orientation? Cinema?
Yeah, I think it's what full canvas, I think is what it's called.
Yeah. Perfect. All right, can you see it? We good here? Can you hear me?
Yeah.
Sweet. All right, guys. So it's really interesting about CADCHF here. I really want higher time frame longs, but I don't think we're ready yet. I think that we really have to come down deeper into our areas of demand because we can just see that higher time frame we're very bullish. We scale out, we have so much liquidity. We swept liquidity here. I really want continuations at least up into our prior level of supply, right? So 8.2. Look at how that psychological level is right here at that supply level. Also, some form of imbalance as well. And we have to come up and run these equal highs. So continuing with the trend is going to be our friend here. And I'm really favoring some sort of liquidity run from these lows. We can see that we had 1, 2, 3 touches. How many people do you think are buying off of this trend line touch? All these retail traders, right? And they're not wrong in their direction. They're just probably too early. We want to come back down into discount. I really want to get back down into here, fill some imbalance, maybe test some sort of higher time frame demand, really just take liquidity. That's really the goal here, because we can see the higher high, higher low, and then ultimately then you higher high up here at expansion. So really want the overall retracement higher low for continuations. And we can see that we do have more drawn liquidity, relatively equal highs here. So in all honesty, guys, I really have two levels for you all to take today. I'm currently in sells at the moment. The reason why is because one, we have a lot of, like I just went over, the equal low down here and the higher time frame objective. We also have ascending liquidity, so trend line liquidity. Many people are buying off trend lines. 1, 2, 3, 4, 5 touches. Okay. We're kind of scaling into the 15-minute here. The fact that we created equal highs, we ran them at 3 in the morning EST, so London open, buy to sell, broke the counter trend, failed to make the higher high, and then made the lower low, right? Supply. This seems to be a very interesting level. So I am in short here. We actually came up into something very small on a lower time frame within supply here. That's why we had that buy to sell probably. And as a matter of fact, this high in this last buy candle before the sell-off, that wick took out that high right here by like a pipette or two. So still looking good for shorts. I mean, however, you could also make the case that we're still bullish, right? High, low. We haven't made a lower low, and we made a higher high here. So this could be an overall pullback for a higher low, you know, back down into this demand, this sell to buy, maybe imbalance right here. We came into very nicely. We had the reaction. We failed to make the lower low again, and we broke a counter trend structure here and made the higher high. So that's also a counter argument. So here's the thing. When we have really good setups like this that are kind of contradictory to each other, okay? So we have sells and we have buys. You can hedge yourself, and I'm probably going to do that. I'm probably going to be buying here at 7439, 744. Okay. I'm already in shorts and a little bit of profit because we can see that if we are to go short, then this would be a beautiful level to play off of. The supply that, you know, invalidated the demand, now turns supply. So much confluence surrounding here, liquidity, supply, buy to sell, sponsored move, time and price, right? And then sell side liquidity down here. So that could be. So I am in short here. If you guys want to hop in shorts, wouldn't be opposed to it. But I'm also going to be hopping in buys here, probably hedging myself. So when I time frame, you can see stops on the buys would be below this low here. Stops on the sells would be above this high here. Okay. So how do we know when a hedging opportunity is not only valid, but appropriate? Well, it's valid in terms of setup, but is it appropriate in terms of the risk to reward? Well, in this case, it is, because if we play some right here, say 18 pips, and if we sell it down into that objective, that's about a 1 to 6, 1 to 5, 0.88, 1 to 6, right? Let's keep that in the back of our minds. Now, let's just say it goes long. We have a little bit of a pullback, we get in long, and then it takes out our stop loss here on the sells, but we're still in the buys, right? Well, stop here, 29 pips, let's call it. And then we run it all the way up into really two levels. This is the more intermediate level of supply, just kind of intra-trend. We also have our overall level here, prior supply, prior market structure with all this imbalance. So even with the first target, you're still getting a 1 to 4. With the second, you're achieving about a 1 to 7. So even if you lose either one of these trades, the winner is going to clearly take control over the loser. The only thing that I wouldn't want to see here is just price continue and hit my stop now, but still, I would still be looking for buys. This would be an appropriate level for buys for a hedge. Now, if we just do go short, yeah, we'll lose on the buys, but then we're still in really good profit on the sells. But then that risk to reward factor takes over, and we're making more money either way, but yet still losing a trade. So hedging is not always the worst thing in the world. That's CADCHF. That's really what I want to see. So we can kind of go over AU. Aiden's going to touch base on AJ. Looks very similar to AJ in my opinion. We were originally looking for price to get back up into our imbalance that came into supply, that swept liquidity. We had the drawn liquidity here, but I also mentioned on the webinar on Sunday that I will be looking for a short from this level. Why? The structure, lower low, lower high, lower low. What do we have in here? The counter trend, high, low, high, low, high. Came down into demand, failed because of growth, flips to supply, a massive risk reward. But now we're pulling back. I still think that the dollar is not done with its upside momentum and pressure, right? So 2 levels I want price to come into. Really just our first or our most recent buying volume before the sell-off. So 68443. I will probably be looking to sell there. And then the 15-minute level here, we can come up a little bit further up into our most recent area of supply. Guys, when I post stuff like this, let's say I have this box, it doesn't mean that, well, the entry could be here, definitely at the open, right? But that doesn't mean the stop loss is there. This is just the general area you should be looking to sell from, right? The stop loss in this case would have to go above the high, in my opinion. I'm more of a conservative trader. You could put your stop here and be more aggressive. Yeah, that would be a higher risk to reward. But again, you're taking on more inherent risk. That price comes up a little bit higher, takes you out, and then falls, just like we had on CADCHF, right? Well, actually, I'll go over that in a minute. But I think it was AU. Yeah, see, look. We had the initial reaction, came up a little bit more. If you had your stop above the high, you would have lost, right? But I put my stop right above this high, just based off market structure within the supply, right? So I was still in the trade. I'm still in this trade. I still have a little bit of my position open, just in case we do pull back and continue. But that's what I'll be looking for, those 2 levels. So yeah, guys, drop a message in the chat if you guys are seeing the same things. I'd love to know if my analysis is pairing with yours. That'd be nice to know. And also we can take advantage of counter trend moves. I'm sure this is some sort of accumulation, lower time frame. We had to run on liquidity here. We're creating sort of relatively equal lows. Let's just say we do something like this, clear sell to buy, right? Maybe coming into this level. I don't know. Let's just say that happens. Equal lows are run. Counter trend is broken. Sell to buy. We haven't come into our objective yet, so we can still look for buys. And this is all counter trend. You can be doing this. If we have the right setup and all of our confluences being met, we can definitely do that. If price does something like this, we have a sell to buy and we come into our objective, well, then the buys are off the table. We want to be looking for sells because now we're in the selling zone, right? So it's just about being patient, about making sure that your rules are met. All the retail traders, or even if you're a smart money trader, those of you who aren't consistent, I can probably tell you the root cause of that. It's probably because of 1, risk management, 2, well, just really not knowing the strategy, but also 3, trade management and really not knowing the best place to get in. Forcing trades is a big thing within inconsistent traders.
Yeah, sorry guys, I turned the jazz off. Apparently it was competing with your voice, Nate. I had it on the lowest setting. I guess my mic is just picks everything up. So
yeah, no worries.
Worth a shot.
No worries. But yeah, guys, it's a hard truth. I talked about it within my VIP community. I did a video yesterday, and I talked about, why retail, well, not really retail, but retail, but just inconsistent, non-profitable traders, why they continue to fail. It's honestly not the strategy, guys. It's not. It's just you. And it sucks to say, and it's the hard truth. But as a mentor, I have to say stuff like this, because the sooner you really realize the reality of your trading, the better you become a lot and a lot quicker. It's not the strategy that's bad. It's just the lack of patience and the lack of practice that many people have.
Yeah, I mean, we say this all the time, right? I mean, you can trade really any strategy and be profitable with it if you've mastered your own emotions and psychology. So I know obviously tons of profitable smart money traders, but I also know quite a few profitable retail traders, right? Because they have perfect psychology,
Yep.
right? So that's really the most important thing. So while most people spend all their time trying to switch from strategy to strategy because you lose a few trades and, oh, this doesn't work, let's go to another one. Really, that's just their psychology. It's not the strategy, right? So my recommendation is to always find a strategy that resonates with you, whether that be retail or smart money, and stick with it. Go through the growing pains of going on losing streaks and not changing strategies because you lost a few trades in a row. I promise you, whatever strategy you're trading, you're going to lose a few trades in a row. Okay? So it's a practice in self-discipline and mastering your emotions and controlling those emotions. And that's what's going to get you to the next level. It's not some magic, secret trading strategy, right? So
yeah, there's no holy grail. There's no golden strategy. There's no anything.
Obviously,
even
we're
though
preferential to smart money,
have been doing this for quite some time and everything, it doesn't mean that we are your savior anyways. We can't take you to profitability. We can give you all the necessary tools and resources, but it's really up to you how your work ethic is and how much you practice. And that goes for any mentor out there, not just us.
Do you believe in the Candlestick Trading Bible? What is that?
Candlesticks are important, I would say. I don't really pay too much attention to it. I like when price enters into a level at the right time of day, and I like to see reactions. I like market structure, I like supply and demand, and I like reactions, confirmations. Candlesticks, they can be deceiving.
Yep, right? Misleading.
Because what about this right here? What if I go to the 4 hour here? Okay, this is our original entry, right? Had the reaction, and then we had our engulfing. What does that tell retail traders? Buy, right? Nope, right back to the downside. That's why I don't really care too much about candlesticks. The only way I take candlesticks into my own trading is when it comes down to like supply and demand levels, potentially. So let's just say, go to a lower time frame. Actually, I'll go to something like, what was it, CHF?
Sorry, Luke. I didn't mean to sound conceited there. I genuinely was curious. I've never heard of the Candlestick Bible.
Yeah, I haven't. I really haven't either. So here, this is what Aiden went over in his daily market breakdown video for our VIP community last night. He talked about this level. Now, when we look at supply and demand, I like to look at and see, doji candles, because that's really indecision, because it's buying and selling at the same time, closing at its open price, just about. When we see doji candles, that doesn't automatically constitute a supply or demand level. Obviously, you have to have all your confluences, but in this case, I like dojis because, one, it tells you, okay, there's indecision. Also, maybe some sort of lower time frame accumulation of some kind. So you have your expansion, your indecision, choppiness, your expansion again. That's what creates your demand or supply. So that's really the only candlestick I look for. Obviously dojis, but again, this doesn't mean here we have double doji. This doesn't mean that this is a supply level. It could be if we have reactions and confirmations, breaks of structure, time and price, everything that goes along with smart money. But that doesn't mean this is a valid region to take a sell. You could easily blitz right through it. But because it just comes down to structure and everything at the end of the day.
Yeah, I think it's all a matter of context. It's a matter of context as well.
Yeah.
and you got to understand where you're trading, like where you are.
Mm-hmm.
But how many times, guys, do you see? And what's that pattern called, Nate? It's like a, what do they call it? Like a shooting star. How many times do you see that? And textbooks say that's a reversal pattern, and that wick gets filled immediately.
Yeah, exactly.
That's just what I've noticed. That's why I don't pay much attention. It's misleading.
Mm-hmm. Definitely. Let's see. Let me go over EURNZD. So EURNZD, we just came short of our level. And now this is quite important. You have to think about the reasoning behind why we may have missed this. This is a higher time frame level here. Why do you think we're pushing down so strongly before we come into supply? It's probably because they're trying to entice traders to short off upon some sort of pullback, right? They want us to think that maybe the trend is over, momentum has shifted. In all reality, it could just easily be a sell to buy right back up into it. And that's what I think it's going to be. So we have a lot of equal lows, liquidity here, liquidity here, liquidity here. Yes, we've broken structure lower time frame. That doesn't mean we've broken structure higher time frame. I've been talking about, I'm not going to go over this because I've been talking about it for months now, I think, ever since this played out. When was it? April, beginning of May? Yeah. So if you don't already know what's going on in here by now, I'm sorry, I'm not going to repeat myself. 1.63 is my overall level in which I will be looking for longs. But we haven't come down into that level yet. We have broken counter trend. We have actually kind of distributed on a lower time frame. So if we can get retracements into these intermediate levels of supply, and notice again the supply levels, doji candle, double doji candle here. So key areas of interest for us to be looking for continuation shorts if we can see a pullback. All right. Now, what if price, what if there's a clear, what would you look to take a trade here or here? Why wouldn't you? I'll let Aiden answer that. Why wouldn't we take trades here if we see something like that?
Because we've already come down into the higher time frame level, guys.
Exactly. See, this is why top down is so important, guys. You have to understand your objective. You already come into your objective and you don't already know it, or you don't even know this is an objective to begin with. Objective meaning, sell side liquidity in this case, or potential areas for reversals. We already come into those areas and you look to take a trade and then it blitzes right through your stop loss, you're thinking, well, I had all the confluences for shorts. Well, in all reality, you probably didn't do it. The best due diligence and understanding exactly where we are in the market, right?
That's actually a good example, Nate, of like a logical sell model. If you notice to the left, when you see multiple runs on the high, and it's not like strong closures above, right? You can see how we're just making passes at the high. Yep. And then we get a run lower, and we take out the higher low within the lower time frame structure. You see that right there in the middle. To the left a little bit. Yeah, we run the low right there. Okay, and we're triggering the breakout traders prematurely. Where are they putting their stop losses? Right above the high. No, yeah, right there. So they'll make a pass on the low, make a final pass on the high, and then we break down. That is, and I don't want you to memorize the pattern here because it always looks somewhat different, but understand the logic, what's actually going on there, right? You got people trading that channel up, and what we're doing here is really trapping people on both sides of the market. So now we've fully broken down. That should be confirmed. That should be good for a pullback and a continuation, with those equal lows to the left as the draw on liquidity now, right? We should have achieved what we wanted to the upside for the time being.
Yep, that's what I'll be looking for. If we can get a retracement, again, EN is very erratic. So a lot of these exotics are quite crazy in terms of their movements. We could easily just engulf and continue down into our level. But I still will be looking for longs here. But if we can get retracements, that will be nice for continuations short. And then obviously we're going to be looking to take this higher time frame into our overall level 1.7, 1.71. All right, I do have briefly two more. I'll hand it over. Let's see. What am I doing? CHF. CHF is interesting. Let's look at the higher time frame. What did we do in here? Look at the low. We swept the low, and now we're retracing. So this is liquidity. Even though I don't think that we're done with its overall, bearish market or sell here. We're in a bullish market, but I want to get back down into discount higher time frame. But before we can do that, what is price telling us? Well, we swept the overall low here. We've accumulated in price. We have broken the counter trend. We're making higher highs, higher lows. If we are to go long, great, we're looking for longs. If we are to go short, where are we most likely to go short from? Well, we should probably sweep this liquidity. We should probably come up into pretty much our intermediate level of supply, and maybe a little bit further to fill up some imbalance, either this previous structure or maybe up into here. Okay. So regardless, we still have room to go to the upside. I want to be looking for buys at least until we hit this level at 977. So I had a couple of areas. I had two levels, here and here. First and foremost, we made a higher high. We failed to make that lower low. We made a higher high again. So now we know we're in pullback territory. We pushed down market open into our 1 hour area of demand. And then we reacted, formed a little bit of demand here and continued.
Now that level was given out to VIP. So VIP should be in this, guys. If you're not, gotta watch the daily market breakdown videos.
Yep, definitely. Big, perfect area to be entering. We have a level of demand here and here. This is really intermediate. So like, you think about it in terms of structure, this is really your structure here. So your range, well, really now up here. But anyways, if we get a pullback, I would think this would be liquidity. Demand that retested prior market structure. If we come a little bit lower, we could come into this area of demand here, stops below that low. If you're buying in here, I probably wouldn't place stop below this low here, just because that's a huge stop loss compared to what kind of return you get. So that wouldn't even be worth taking a trade. You could be risky, place it right there, or you could, be a little more conservative, place it below the engulfing, the start of the expansion, right? Now coming back down into here, we come into this level. Stops could go here or it could go here. All right, so just kind of have to position your trade the best possible way based upon your own risk tolerance and the risk reward that's involved. But, it looks like we're still just going to come up into here. We may not retrace. If we do retrace, these two levels are valid. I will be buying from these levels. If we don't, then we could be looking for distribution to go short. Again, like Aiden just said, if we come into this level first and then retrace, the buys are off the table. We won't be looking to buy because the higher time frame objective has been met. Okay. That's what I'm looking for USD Swiss franc. It's tough, guys. I really would be sending out like actual, I wouldn't say signals, but trade ideas for you. But we only have an hour and they're not in our area of interest yet. I guess I did give you CAD Swiss franc here for sells, but we also have buys. So you could definitely be placing buy limits at that level. Probably 7439 would work. Last one, and then I'll hand it off. AUDNZD is really cool. Now, originally I thought, because I had my limit order here at this demand, we closed here on Friday. So I was like, you know what? We're probably going to run this low. And even if we already go long, we should probably run this low. We actually didn't. We chopped around and then engulfed on Monday. So we still are in this trade. You can see that higher high, higher low, higher high, higher low coming into the LPOR, last point of return. This is also demand. You also have a lot of liquidity here that was run. Okay. Where's the objective? We haven't come into it yet. Scroll out here. Well, when we're above the daily 50, that's a good sign. Look at that high here. We want to run that high from 2018. We haven't even come up into it yet. So 11750 or 1.12 would be a good target for longs. And we haven't come into that objective yet. So we're still looking for longs. Okay. We have swept. We did sweep these relatively equal lows, ascending liquidity, 1, 2, 3, 4 touches. People are buying. Nope, sell to buy. We actually did accumulate. Fake breakout, lower low, lower high, and then the higher high was a fake breakout. We have liquidity. We came back down into our overall level of demand again, and then we rose, breaking the counter trend structure, which gave me the conviction that we are to come back down into this area of demand to continue long. Had a little bit of drawdown. That's okay. But what's interesting about this is that if I just go into 10-minute time frame here, we can see that we are accumulating. This is accumulation. Okay, we have broken counter trend here, pulled back, failed to make the lower low, higher high, broke the counter trend in here. Clear accumulation. And if I just mark this off, we can see our last sell to buy before the structure was broken. Came back down perfectly into that level. Pushed up, failed to make that higher high, and then we continued long. Okay. What else? Equal lows. So that could be interesting later on. What if I also scale in maybe the 5-minute time frame here? Maybe the 4-minute, maybe the 3-minute. I think it's down like, yeah, I'll call it 3-minute time frame. Equal lows prior to a level. We had our last sell to buy that came into this last sell to buy within this accumulation. So if I mark this off, or even mark off the 50%, just call it here, okay? We can see that that's below our equal lows. Now let's just go back out, get out of bar replay here, and zoom out. Look at where that level lines up with. We swept these equal lows over here, came into that 50% of the accumulation here, that came into 50% of the accumulation here, that swept the liquidity here, that came into higher time frame demand. This is why it's also important to limit the number of pairs you trade, because you can be in tune with all of this. Okay, so what's going on in here? We tapped into it perfectly. Perfect accumulation again. Not clear accumulation, but we did. We tapped into it, we rallied, we failed to make that higher high. Or excuse me, lower low. We made the higher high, breaking the counter trend structure. You could have easily probably taken it off with a pullback. Maybe 61, 71, maybe just somewhere in here. Right? Perfect entry, stop loss right there. Would have had a great risk to reward. I didn't see this in time. This was, I think, Sunday, July 4th. Yeah, that was Monday morning. I don't get up for London. I only do New York. But if I did see this, this would have been a phenomenal trade. Actually, you can see the demand that was in here, right there. Upon the breakout, perfect tap into it, to the T. Precise. Okay, so let's zoom back out. Where is our area of interest now? So now that we have rallied, yes, we didn't make the higher high yet. I know that. I would have liked to have seen a higher high, because that would have ensured or really confirmed the range between here and whatever the higher high would have been. Right? Because if we come any lower than the range low, then we're breaking structure most likely. We did make the higher high. However, I have so much conviction this is going along, so much confluence. We have come down into our objective already. And now I'm just waiting for more of a pullback. And we can see this is sort of like a flag formation, expansion, and then just slow, steady retracement. So this kind of flag. So I have two levels. I have this intermediate level of demand here, but I really favor this level of demand here. Also the imbalance. So I already have a buy limit here. I think I have it at 1.0987. I also have a little bit of a tinier position here at 1.1. I think it's, yeah, 1.1 psych level. But yeah, these two levels are looking very, very good for longs into our higher time frame level of interest. Even if you were to just go 1.1175, even if we had stops below that low, that still would be, yeah, it's still 1 to 4, still pretty decent. I like at least a 1 to 3, or else I don't take it because it's not worth it. Right there. No, that's better. 1 to 7.77. It's a good number. 777. So, guys, that's what I have. I'm gonna move it over to Aiden now, and he can kind of go over what he sees. You guys have any questions so far? Let's see what we have. Please do video series on white top method. I think that our Wyckoff course really just totally destroys everything else. I could try to do a couple of videos here and there, but really nothing beats that course. It's just too good. Why price has objective to return to previous area of interest? I guess I'm not quite sure what you mean.
What is it?
Is there a valid set? We haven't BOS above. Yeah. Are you talking about AUDNZD? Yeah, I would say it's valid. I would like to have seen a higher high form. Sure.
Our entry confirmation we talk about in our courses, scale into the lower time frame.
Very, very important. There's specific things to look for.
Specifically, our Wyckoff and supply and demand course.
Sorry, you said limit number of pairs you trade. I mean, yeah, guys. I mean, we have hundreds of clients. I kind of have to do analysis on all these pairs. I mean, you guys want GJ, AN, EU. I mean, there's so many different pairs. I personally only trade only a few, and those are part of the ones that I went over. That's part of my list. But I have to kind of go over everything else because you guys look at those pairs.
Yeah, I mean, you guys know me and my love for EURNZD. So I try to stick to the majors, especially EU and GU, AU. They're probably my favorite pairs. I do like GBP CHF for some reason. I don't know. I think it respects smart money very well. We'll see any setups on it.
GCHF. Yes.
Yeah. GCHF's really good for like mitigation trade, which we also talk about in our smart money course. I think someone mentioned gold earlier. Ultimately we're going to run these equal highs, but for the time being, I think the objective with this dollar strength might be these equal lows here, right? And we have some more equal lows here. So I could absolutely, and I don't typically look at gold, but I could absolutely see this thing running the sell side first, okay, with this continued dollar momentum, running that sell side and then getting that true rally to the upside, right? So for the here and now, let's see. First of all, this was the opportunity right here that, just because I don't look at gold much, I missed. Let's see how many. 650 pips. So really for the here and now, I mean, you can see the imbalance move here. I think if we can potentially trickle back up here, and that is crude, into this potential supply, we could continue. I don't know what just happened. But we could see some continuation here on gold. All right, so this looks pretty good. Now I will note, I'm not a huge fan of kind of all of this stuff in here. Like this kind of retail trend line going on. That to me is a potential, target for a buy side liquidity run and then a massive spillover. So just keep that in the back of your mind. But this would be the most logical lower time frame area to look to play off of. And we don't leave equal lows intact, guys. We might for quite some time, but if the momentum is right, which it looks like it is at the moment, I don't really see anything in here stopping this. So we should more or less run out these equal lows, in my opinion. So that would entail more dollar strength. Looking at something like EU, we're trading down. We're actually trading down into like a monthly inefficiency right here. I had this marked off for a little while as well. You can see we're filling that in right now, but I don't see this being the bottom right now that we're sustaining below this level. Again, that's if we sustain, right? If we do kind of have a sharp reaction and closure above the level to end the week, I might kind of shift my thought process. But we could very easily now see this thing trade down into here. Hopefully the music isn't too loud. Nate, let me know if it is. I tried to turn it down a little bit.
Yeah, I think it's good.
So yeah, so we, maybe we do see a reaction here on EU, but I think, just given the momentum, the failure of this to create a new higher high, create a lower high, obviously we're not potentially pricing in a firm lower low, could lead us down into this area. Anyway, let's look at a couple setups for you guys. Yeah, USD CAD. This is the one that I gave out the sell on this from here last week. Caught some pips on that. We busted through it. So really we're seeing this kind of key area flip from demand to supply back to demand. And so this is more so just a logical, almost retail type of setup as in terms of break and retest, just looking to get a little discount on this engulfing from yesterday, right? So, I'm thinking somewhere around the 297 area, and I'd like to see this thing run up into 3250, right? So that's going to be my target. Now, why is that my target? Let's go out to the daily. And you can see this structure to the upside, higher highs and higher lows. And if you pull a fib on this kind of leg here, okay, sell to buy, higher high, higher low, that would bring us into that negative 27 extension, which I like to use as targets. Understanding the higher time frame leg, I like to use that as targets for my intraday trading as well. Right, so if I understand that we have singular leg to the upside, retracement, looking for another leg to the upside, I'm looking to ultimately target that level. And this looks like the lower time frame area that might give us that opportunity in that final leg up into 3250. Okay, so be on the lookout for this one. It's kind of difficult because there's not really a solid down close to kind of put the stop below. So what you might even do is just simply, like Nate mentioned on USD CHF, let's engineer the liquidity. Let's then sell to buy. Let's break that structure, lower time frame. And this is a rudimentary kind of cursory overview of answering that person's question about kind of entry confirmation. We want to see the sharp reaction off of our POI at the right time of day. Okay, in the lower time frame pullback, after breaking the lower time frame structure for the continuation, stop loss can go there. All right. So that is UCAD. What else we got? Like I said at the beginning, I'm quite liking some of these yen pairs. Okay. EJ running out the low, destroying demand. Right. So I think, if we can, it would be nice if we can pull back kind of into this area. Right. A lot of these yen pairs have similar candlesticks. But, we could very easily kind of maintain closure here and have that retracement for another leg to the downside, and really run out or at least trade down kind of into this area here at 133, where I like to see it. But I kind of like some of these other yen pairs a little bit better, particularly AJ and NJ, as we're seeing safe haven inflows into the Japanese yen. Naturally, high beta currencies like AUD and NZD are going to weaken, which they have been, obviously. But we kind of obviously like to pair the weak currencies with the strong, right? And so I think AJ and NJ have some pretty nice opportunities with these up close candles, right? And that's what we look for in up close candles. We want to see that kind of little to no wick at the opening. This one didn't necessarily run out much liquidity, which I typically really like to see, but we did have that sharp reaction to the downside. So if this were a valid candle, we should have kind of sustained and continued, but we just railroaded, okay, engulfed back down. Should mitigate out of these positions here. And I think at least short-term targets we can take down into 90.9. If not, seek out the liquidity resting beneath these lows here and trade lower into 88. Right, but the same can be said for NJ. Okay, very similar price action here. I keep doing that. Very similar price action. You have these kind of small down close, looks like a little flag, and then you pop up, you get people, breakout traders trapped, engulf back to the downside. I mean, this just looks logically, makes sense. It's clean to me. And we have relative equal lows now. So that'll be obviously the first target drawn liquidity, but same relative targets on NJ as we have on AJ. All right, so let's look to continue to stair step some of these yen pairs to the downside. I mean, you can even kind of just fib this and target the negative 27, right? But a lot of people probably looking to play off of this. You can see the manipulation, the sell to buy, running this accumulation here. And why did this? Why is this failing? Okay, why is this failing? Because this did not produce a higher high. Okay.
We also have not come down into the objective. I believe that's around 82.5, almost 83. That area of demand.
Yeah, you're looking about in there. Mm-hmm. Yeah, it didn't, and this isn't valid structure because this low did not produce a new high. In fact, it produced a lower high. Right. And maintain supply here, maintain this kind of distribution that ran liquidity. So high, lower high, lower high. That's giving us that indication that we're going to start, running the lows and producing lower lows. So really do like this up close on NJ, and we are accumulating now, which is nice. So we're kind of in this little block here of accumulation. Engineering that liquidity. What might happen is you run the low first. Again, that model, run the low first, trigger the breakout traders, put the stops above the range high. Okay. Trap these people who are trading the breakout of the range here and continue. Right. So that is NJ. Similar stuff on CHF JPY as well. Okay. CHF JPY. We have our kind of levels down here. So as Nate preached earlier, if it comes down into the objectives first, right, because obviously higher time frame is significantly to the upside, but we aren't in discount yet. So expansionary move, okay, retracement not in discount at the moment. So I'm looking to sell into discount to potentially look for longs on this one.
Here, just if I can interrupt really quick.
Yeah.
Many people ask, and they would ask, well, why are you looking to sell when we're bullish? You taught me to only look for trades in the direction of trend. Yes, that is the case. And even though, obviously we're not in discount yet. We haven't hit that objective where the arrow is. However, to ensure that you can still trade counter trend, notice how we made a low and then we failed to make a higher high and then we made the lower low. So the lower low followed the buy to sell. So that was the second drive into the low. So that really confirmed that we're now in some sort of pullback phase. So the counter trend, bearish trend is now valid. And now we should be looking at coming into the higher time frame zones to then yes, continuing to look for higher time frame buys.
Yeah. Yeah. And I like how, oftentimes you'll see yen pairs and I call it stair stepping, but you've got the up close that ran some form of liquidity here. Look at that shooting star reversal pattern. Nope. Destroyed. But anyway, you stair step down, right? So you've got up close reversal, right? And you've got consolidation, up close, trade into up close here. Okay, mitigate, continuation, right? So we're almost looking to just continue to stair step down, right? So naturally we'd expect, some form of consolidation, buy to sell, stair step down, right? But, we're looking to trade this lower time frame structure into the higher time frame structure. Okay. But the other thing to keep in mind, hop down to a somewhat lower time frame. Keep this in mind as well. What is this guy? Okay, retail head and shoulders, right? So be wary of this, especially if we just continue down. Retail's potentially going to be looking for the pullback to the neckline as a retest, but we're bullish, higher time frame. Right. So that's the only thing that gives me pause in looking to sell here. But I think my gut tells me we should be good with this up close for one more leg to the downside. And I'm looking at potentially the mean threshold of this candle, 50%, to have one more drive into the low. So you got one drive, two drive, three drive into the low. Would be nice. All right. So all these yen pairs are really kind of similar. CADJ, nice area there. Kind of miniature supply and also this kind of higher time frame up close filling in this imbalance. I think this one, and again, here's another one that this area here, this did not produce a higher high, right? So, those looking to potentially buy here, I mean, sure, you can leave this as a POI and look for a reaction, but did this produce relative to this high? Did this produce a new high? No. Right. And so in fact, you have the bullish structure, higher highs and higher lows, failure to create that higher high, breaking this low here. And so looking for that retracement to continue down, target this low as their initial targets, but I ultimately think that we can trade down into here on CADJPY, 100.2. All right, and still maintain our bullish structure, higher time frame, right? Because this is our trading range. Lower high, higher low, higher high. This is our range. We're still working within this range. All right, so I think that wraps it up. Euro GBP, gave this one out to you guys a couple weeks ago as well. Congrats if you caught it. I don't really see much unless we get some type of liquidity run into inefficiency and continuation. We have tons of liquidity that will get run right here. As the draw on liquidity, we're now running the lows, right? So I think that wraps it up for me, Nate. Anything else? Do you think I missed anything? Anything else you want to talk about?
I think we covered just about everything we wanted to today. Guys, do you have anything for us? Any questions? Anything else maybe you'd like us to discuss? I know so many people ask me about US30. I just don't trade US30. So honestly, I probably wouldn't be giving you the best value there. I mean, I can try to break it down for you, but not something I actively look at. What confluence do you have that an order block or area of demand or supply will hold? Well, there's many factors that go into these levels. So first and foremost, you have to do your proper top-down analysis, starting off with weekly, going down daily, 8-hour, 4-hour, all the way down. Very important that you understand, one, the directional bias, two, where the objective is based upon that bias, where the liquidity rests, where is price going, and then scaling in for potential areas of potential supply and demand, looking for breaks of structure, reactions, confirmations. There's so much that goes into it, but to give you a simplistic answer, in order to, let's just say everything that I just talked about, it's already confirmed, and you're looking at price coming down into an area of demand. Well, how do we go about confirming that? Well, there's no such thing as 100%, so confirmation doesn't mean 100%. It means high probability. So when you come back down into an area of demand or come back up into an area of supply, you want to be looking for reactions. You want to be looking for a slowdown of price, potentially lower time frame divergence, and then really looking for some sort of liquidity that is built up. That liquidity is then run, and then the opposite form of momentum comes in that reacts off of said supply or demand level. And then obviously looking for a break of structure, counter trend on a lower time frame for then a pullback to then either buy or sell depending on which direction you're going. Obviously, that's just the easy broad level or broad explanation. There's a lot more that goes into it and what to look for, but that's really discussed within our courses that we save for those people. Can we go over AU? You probably joined late. I don't know if you heard. I already did. I went over AU. So just watch the replay. It should be posted right after this. I'm not really quite sure how that works. Is it posted right after we end the live?
I'm not sure. Anyone know how that works with YouTube Live? I mean, it probably takes a little while to process, but
it'll be up. But
it should be available.
If you heard Aiden's breakdown on AJ, it's pretty much the same. We're looking for shorts on AU. Yeah. All right, maybe I can try to do US30.
I think we're running out of 9 o'clock.
Post automatically. Okay, cool. Yeah, I think the next one. I don't think there is a next one. Do you guys know? Is there another live session at 9 with someone else? At 9 a.m. Eastern.
I'm not
if
sure.
there is, I can stop. If not, I can take some questions.
I thought he usually did have someone lined up on. Maybe not though. Maybe we're off the schedule, or
maybe
schedule changed up.
All right. So again, here, we're still in our area of interest. I guess, I kind of go over catch up. Still potential that we short off. Again, I'm still looking for that buy from our demand. Anyways, US30. I don't trade US30 that often. I haven't really understood its movements. Higher time frame targets, 29,600. That is COVID's high in 2020. So shorts are definitely in order now, whether that be from 32,512, just previous market structure imbalance, getting back up into premium, or pushing back up a little bit higher into our overall level. You can see descending liquidity. We have equal highs here. We have that clear buy to sell, that swept liquidity coming into supply. That was a result of our higher time frame distribution. So that imbalance there. So either one of two levels for me, 32.5 or 34.35, something like that. I don't like to trade lower time frame US30. I just don't know enough about it. See, here's the thing. The concepts that we teach can be applied to any market or any asset class because that's how any market's moved, right? It's based upon liquidity, volume, manipulation, all that stuff. However, in order to trade something consistently and profitably, you want to understand its individual movements as well. Because even though the same concepts will apply, the charts will, the way that each individual pair moves is going to be different. And the better you can master each individual pair, the better. So just like I talked about on AUDNZD, I like AUDNZD for buys, right, from this level. I'm very in tune with price movements here. I've been following this for quite some time now. Same thing with Aiden with EU. He's been following it for years. He just knows it like the back of his hand. But something like GBP-NZD, I would have no idea. I don't trade it. Same concepts would apply, definitely. But in terms of its movements, it'd probably be a little different. Hopefully that helps. No live stream after this? Okay, cool. What's the best time to trade? Good question. Time and price is important, in our opinion. London Open between 2 and 4 a.m. Eastern time. New York Open
London's the
between
best.
7 and 9 a.m. Eastern. Really trading between the hours of 3 a.m. and 11 a.m. Eastern Standard Time, wherever that is for you, is the best. London, New York session is the best. Obviously, around that 6, 7, 8 o'clock a.m. Eastern Time is that London, New York session changeover, which also provides potential manipulation zones or areas of interest being met.
Yeah, and London session often gives you that, if you can't trade London, it's okay. We don't typically trade it, but it gives you a good clue as to what's going to happen for the remainder of the day. So, key into what happens in London session if you're a New York trader. If you're in a bullish market, you would naturally expect the low of the day to be formed during London and look for that retracement into discount for continuation. It's just logic, but it reinforces your bias in New York session.
Yep.
So
Definitely.
not a big deal if you can't trade London.
Yeah. Let's see, guys. I'm sorry. This is so many messages here. If you have a question that I didn't answer, say it again. I'll be happy to go over it. But obviously, guys, as most of you may know, we have shifted our structure in the way that we work with clients. We were originally a signal service company, for those of you who don't know. We just found that created way too much dependency. We want people to not rely on us and learn this for themselves and really become profitable on their own. Because this skill set is something that's so immeasurable. It's amazing. And if you have it, I mean, I'm only 23. Aiden's 24. We don't have to work. It gives you so much freedom. And that's really the goal. You have to understand your why in trading. Why are you doing it? For freedom, for a little extra cash to pay for whatever. Really, ultimately, the only way to become successful is to, one, put in the time. But the goal shouldn't be like, oh, I want to make $100. I want to pay for a car. Because in order to do that, that's just a short-term goal. You have to think long-term within trading, because you have to be able to sit down and practice this for months and months and months. It's not a get-rich-quick thing. It's not one of those things that you can do for a month and just be good at it. It takes some time. It really does. It does take time, but it's so rewarding. So we've kind of shifted our way of running our service. We want to work with people who have that same mindset as we do. And so if you're really serious about wanting to not only learn the skill, but make it a career or get funded, become a six-figure funded trader, which is our ultimate mission for you guys, then our program might be for you. But if, you are the person who's, lazy, procrastinates, makes excuses, not coachable, doesn't do the necessary stuff in order to further yourself, then unfortunately we wouldn't be for you. Feel free to, take part in these live sessions. We always have this is always for free. But if you're an actual serious trader and you want to really divulge into these concepts and learn it and really become that professional trader that you can be, then I think our program would definitely help you. So if you're interested, just hop over to our website. We can get on a quick call with you, book a free call consultation with one of our traders, and we can chat about your goals, just see where you're at in your trading, how we can best help you, some sort of individualized, actionable plan that you can take. We even send you our proprietary trading plan, and just to see if it's not only the right fit for us, but if we are the right fit for you as well. So, any last questions about the live or anything else?
Davood, buyer name, first of all. But we do hold this session weekly now. It had been bi-weekly, but Cam is really good to us, and we have a great partnership going. So he's letting us hop on here weekly now, every Wednesday morning, and we did run a live session on Sunday as well, pre-market analysis. That might be something that's continued in the future. So you could be getting 2 sessions out of us a week, guys. And if not on Sunday, then we certainly post Smart Money Sundays. It's something that I've been doing for months and months now, and it really just breaks down what I'm looking at, just kind of higher time frame bias, give you that that extra kind of conviction for your trading during the week, and give you POIs, higher time frame, and be like, hey, I'm looking at downside on EU this week, and upside on EURNZD. I'll just give those pointers out, and it really does provide value and help a lot of people. So if we don't have the live sessions, certainly be on the lookout for Smart Money Sundays on our channel or Trading Nuts channel, one or the other, if not both. But we always put stuff out there on the weekends so you guys can prepare for the week ahead. We hold this session as well.
Yeah, y'all are great. Help me so much. Awesome. That's the goal, guys. Thanks so much. I appreciate the feedback. Constructive criticism is also something we do enjoy. So if you have anything that you don't like that maybe you'd like to see us change, please feel free to let us know. We're here for you guys. This is all free. All free. Weekends, Wednesday mornings. Any other questions about trading? Any other questions about psychology? Anything else that has nothing to do with trading? I'll stay on for another 4 minutes until quarter after, and we'll head off. Yeah, guys, stay tuned for these videos. We post these, once, twice a week. I also have a little series on my personal YouTube, Ariel Fx's YouTube, that it kind of goes over just, different things, different concepts, different ideas about trading. I think this Friday I'll be posting one about, my personal experience over 5 years' time that I've been doing this. What problems I've come across. The issues with this industry as a whole and how we can solve those issues. So maybe you don't have to go through those same problems. Stay tuned for that video. It should be up Friday or Saturday.
Ariel Fx is the YouTube. You want to type it in. I can't type for some reason.
Yeah.
Yeah, we also have a whole Smart Money Concept series on the Trading Nut channel, guys. So if you haven't seen that, definitely check it out.
Actually, type in, just type in Ariel Fx on YouTube and it'll pop right up.
Yep.
You guys trade sessions or set limit orders ahead of time? Yeah, we do. However, we have to understand not only where our points of interest are, but at what time of day is those points of interest approaching. So if I have an area of interest and that price is approaching that level during Asian session, I'm not going to set a limit order. I'll just wait until the London, New York session begins and see where price is at. But yes, I would say 95 to 99% of our trades are limit orders. How much money start in a brokerage is good for a beginner? Really any amount, but you have to understand that even if you only have a few $100s in your account, doesn't mean you should be over leveraging. Don't be placing standard lots.
The point is to not try to flip a couple $100. That's not, that's just, especially as a beginner, it's just not going to happen. Right? That's the harsh truth. The point is to train your brain to be trading with live capital, right? That is an added psychological burden that you don't have when you're trading demo. Just trading live funds, even if it is a couple $100, right? It's live money. It's a different weight on your shoulders. So just the point of that is to get experience with your own money. And then I would recommend using OPM, right? Doing a prop firm challenge when you feel comfortable and you have the necessary experience and you're leveraging other people's money, not your own. Right. And so, you're not risking any of your hard-earned money. It's just more, that's become the big wave in trading, and for good reason. Right. So trade with a few $100 or a couple $1,000, whatever, of your own money and get that feeling of the psychological weight and gain that experience, and then go for the prop firms.
Yep. I will also say there's been so many, because I read through the Trading Nut messages on Telegram on occasion. It's honestly kind of hilarious, some of the things people post. But there was someone who, I forget who it was. Obviously, I wouldn't say the name, but I think someone tried to challenge like 5, 6, 7 times. Why? I really don't get why people do that. Why do you continue to try challenges when you're not profitable? There's no point. Stop gambling your money. Become profitable. Take time. Be patient. Don't try for that instant gratification. You're just going to lose your money. Might as well go to Las Vegas in Nevada and have fun while gambling your money away. Right? So don't do it in the markets.
Yeah.
CFDs, are they illegal? Probably. I don't really mess around with those.
No clue.
Okay. What are the habits? Good question. Find a mentor. Find someone who can coach you. Don't go, if you're going to go live, start with a small account, because if you lose it, it's fine. But it gets you that live feel, that live psychology in trading. Prioritize your education. Don't start trading. Don't do signals. Signals don't work, guys. The only reason why we did it was because we enjoyed it and we were good at it, but we've realized over time that just created way too much dependency. I mean, we were attracting the wrong group. We were attracting the really annoying crowd. And we want people who are serious and won't complain about every little tiny thing. So habits, psychology, number 1. 2, education. Practice. Find a mentor. Courses are not bad. They're really not. They help you find the right person behind the courses first before you just go and buy courses. If you are interested in our course, speak to us first to see if our strategy and the way that we teach is based upon your own personality. That's also
we don't even offer our courses for purchase on our website, right? We pretty much require people to get on a call with one of us and talk things through first. Make sure that the student has the right mindset before spending money on a course.
Here's another question. When putting your stop loss above or below, high or low, how many pips? 0. Right above. Right at the exact high or right at the exact low. Because if price is going to come below that low or above that high, that's not a valid POI in the first place. You can account for the spread if you want. So maybe whatever the spread is, 1, 2, 3 pips, sure. But if price is going to break a high, you see, this is the whole thing about us. We teach you the why. Why is that? Not just like what it is. So why does price, if price is going to come above a high, right? Why does that occur? It's because the original level that you're trying to play off of was not valid, because if it was, then there wouldn't be a point of taking that liquidity in the first place, right? It's all about liquidity. So if it's going to go and run that, even by a pip or 2, then there's probably something a little bit higher, right? Let's say you're selling, so your price is pushing up, and there's probably something that's more valid than where you're originally trading, because it pushed up higher than the high that you had originally set your stop loss at. That makes sense. How to manage your time better? I feel like I'm trading trades more than I should. That's normal when you're new. I'm not quite sure your level of experience, but I would say, do your due diligence before London, New York session. Do your analysis. You don't have to constantly be staring at the charts. For me, I probably stay on for maybe an hour, 2 at max, and then I'm done, because I know what to look for. And I know that many people don't have that level of experience that we do, and that's okay. And being on the charts for longer is perfectly normal. But over time, I've been doing this for 5 years. Over time, you just kind of can look at a chart and understand exactly what you need to look for and what things look like, and it doesn't take too long.
Over time you'll be able to see it immediately and know it, right? And so if I find myself spending more than 5 minutes on a chart during the week, I spend more time on over the weekends doing top down. But during the week, if I find myself looking at a chart for more than 5 minutes and there's not a setup, I move on. Right? I should be able to know it and see it very quickly. Otherwise, I'm just digging for a trade. I'm trying to force something that's not there. So if you don't see, but again, that comes with your level of experience. And if you're a beginner, Nate and I, we started trading in school, and so we'd have homework and studying for exams, etc., until like midnight, and then wake up at 3 a.m. and trade London and then into New York and go to class. And so we were constantly watching the charts. And there's a power to watching live price action, watching price, live as it's coming into those POIs and being able to see the reactions off of those levels live. So there is some significance to, spending a lot of time on the charts, at least at the outset, until you gain that experience and you're more comfortable and what works for you. And then it becomes, well, what is the actual purpose of trading? Well, it's to have the time freedom, right? And not be like, a typical employee or 9 to 5 who's working all day. Well, if you're sitting in front of the charts from 9 to 5 and trading New York, then how are you, you're barely any different. So, spend a couple hours and do your due diligence, but if there's nothing there, there's nothing there. Just move on and go about your day.
Right. But it's all about, rooting yourself in education first. One can't properly trade unless they know what they're looking for. That's why I say the foundation is always education and mentorship. But again, guys, if you're new, don't be discouraged when you can't find profitability or you fail or you're taking hours upon hours trying to do your due diligence and do analysis. That's okay. That's normal for new traders. But that's the thing. If you have the right mentor that can teach you the right skills and give you the right advice, then over time you can develop that and work on it and become better. And you won't have those same issues later down the road. And it just takes time. I promise it just takes time. So if you're new, don't feel like you should know this all at once. I promise it just takes time. Problem with brokers, you having hidden charges, the best broker. It depends on where you are.
I see markets.
I personally use LQDFX. LQDFX is good. I see markets. Yep. Blueberry markets is good. Quasimodo, I don't know what that is.
If you want to regulate it in the States, OANDA.
Forex.com. I don't like U.S. brokers.
Yeah,
How much limit order do you put on your trades? I think you're talking about risk. No more than 1%. 0.5% to 1% is perfectly fine, especially if you're new. 0.25%, 0.5%. Don't risk too much. Get used to risk management. So I guess that answers the other question. How do you start working on your psychology? Use good risk management. Look at what's it called? My position size calculator or whatever it's called. Position size calculator. It's by my FX book. Look it up online. It's really easy to follow. If you can use that consistently, you're already ahead of the game. It's just helps you properly use risk management. Psychology, let's see. Don't get too hard on yourself when you lose a trade. Have a trading plan. Have a rule-based system. And that's something that we provide people who even just book calls with us. Our proprietary trading plan. It's so important to have so that, you have all your rules and your confluences. If they're met, you place a trade. If you lose, doesn't matter. You move on to the next one. If you don't have a trading plan and you lose, then you're not following any structure in your trading.
Yeah, you got to get to a point where you literally don't care if you lose a trade and you don't care if you lose 3 trades in a row, right? Because ultimately that your psychology is strong and that your strategy is profitable and that risk to reward trumps losses or multiple losses in a row. So if you don't care about losses, that removes the revenge trading factor that kills so many people. And it just puts you in a better position. So, I've talked about this a couple of weeks ago, but if I lose 2 trades in one day, I walk away from the charts and go do something else. Just to avoid that temptation, right? I lose 2 trades. It's not the end of the world. I'll come back the next day. Right. So it's little pointers.
So do you bulk of your analysis on the weekend, check setups in the morning? Yeah, so I do really, really in-depth analysis on the weekends when the markets are closed. And then I usually try to do some analysis before bed. Now, I'm on the East Coast of the US, so I'm on Eastern time. So when it's evening time for me, it's Asian session. So I like to do that analysis during Asian to prepare for London, New York the next day. So I already kind of have my areas of interest. So when I wake up in the morning, obviously I'm still doing analysis, but I can see, where price is. And I always have that, predetermined bias and areas of interest even before I wake up. So I'm ready to go. And then, yes, I do set limit orders if I feel that a level is highly probable or entering into a POI. Do I set alerts? Not really. You can. I just personally don't, just because I'm here on the charts during the trading hours and I'm always looking at the areas of interest I'm interested in. Trading in the zone. I heard about that. Mark Douglas. I wouldn't read too many books. So many people ask me what kind of books you read. Don't read, all these bullcrap, articles online or books about candlesticks or patterns, because that's what they want you to know. They want you to trade retail. They want you to have that knowledge so you ultimately lose. Really, the best teacher is not in books. It's through personalized mentorship. It's about one-on-one. Someone has already done it, who's understand the problems and has the solutions for those problems, and who can help you. People who are consistently doing it on a day-to-day basis. Unlearn to relearn. Yes, exactly. We call it POI. Order block, that's not my term. I did not coin it. Michael Huddleston, very, very good trader. I have respect for him. I don't trade like him. It may seem like I do, but I don't. We have our own methodology. All right, guys, I think that's just about it. Have a great rest of your day. If you guys are interested in just talking more, just feel free to book a call. We'd love to talk to you about where you are and how we can help. But yeah, stay tuned for more of these videos. Wednesday mornings, every Wednesday, 8 a.m. Eastern. And then we'll try to do some weekend live session for a little while, see how that goes. But yeah, have a great rest of your day. Happy trading. Stay safe. Use good risk management. And we'll talk to you all later.
Cheers, guys.
Cheers. Take care, guys.